and off camera, so it's just the three of us talking. But we ask him to ask questions. So everybody, welcome to the room. Welcome in. Let us know where you're from in the chat. Stop video.
Good
All
morning.
right.
Happy Tuesday.
Please turn your cameras off and your audio and mute yourself. All right. We'll just wait a minute here to let everybody in. Make sure I mute everybody. We still have people trickling in.
In the
Happy
chat,
Tuesday.
tell us if this is your first time visiting, or if you have been with us for the last couple of weeks, as this is kind of a new kickoff. And what, Rick, we're 3 or 4 weeks in.
This is our fourth call,
Fourth
right?
call.
Wow.
Yeah.
We saved the best for four.
Good morning, everybody. It's good to see you all. And for those of you on the West Coast like me, congratulations on getting your butt up early and getting into learn mode. Excited for this call. Thanks for having me, Rick and
No,
Courtney.
absolutely. So Josh was kind of my inspiration behind these calls. When I got back in origination about a year ago, I was struggling bad. I was talking to my buyers, I was losing deals, I was screwing up the conversation. And a buddy of mine said, go onto YouTube and look for scripts. So I did, and I watched tons of scripts. I tried to implement everybody's different style. And then I came across Josh's style, and I felt like it just fit me so perfectly. How he
Mm.
has a conversation, how he flows. And then from then on, like I kind of became obsessed with Josh. I even cold called him and I was like, Josh, can you personally coach me? And Josh says, I'll do even better. I'll get you coached, not just by me, but by Ryan, by Tim, and all the guys at the Lone Atlas. Come check out the Lone Atlas. I signed up. I then learned not just about the dreams and goals call that Josh is going to share with us today, but I learned about the next call. I learned about the mortgage pre-approval call. I learned about going through the numbers. And I learned that I don't want to be a loan officer. I want to be a mortgage advisor. And that's kind
Mm.
of like what Josh epitomizes. And anytime I get a chance to like see him speak or listen, if I see anything online that he's speaking at, I try to rearrange my calendar to join because anytime I've heard Josh, and I'm sure today I'll learn something new that's super helpful to my business. So please, everybody, make sure you listen to everything that Josh says. The guy's a wealth of information, $100 million producer, and just a fantastic leader in our industry. So Josh, thanks for coming.
Dude, it's funny, like when you get towards the tail end of your career, um, your perspective changes a lot. And it's not about more dollars. It's not about more being at the top of the page anymore. It's really about trying to internalize and figure out, I've had this incredible journey in the mortgage industry. I'm so grateful and so indebted to this industry. And you start to think about what can I do to help that next generation? Because I remember how freaking hard it was as a solo originator, no team, no help, no mentor, probably mentors that were bad mentors, but no good mentors at the time. I remember I started in a broker shop called the Money Shop, part strip bar, part pawn shop, and we also did non-QM mortgages.
I
That's the
feel
place to
like
do
that,
them, right?
I feel like that's ripped right out of like a Tulsa King episode, by the way.
Totally.
I just want to point that out. Like a strip joint, a loan factory. I mean, come on.
Our processors were something else, man. And where I'm going with this, and the reason why I bring this up is like I remember how difficult it was to find truth. I remember how difficult it was to find something that actually worked. And to have an opportunity on the tail end of I'm 25 years into this, to have an opportunity to give back and to hear you say that something I said on a video impacted you and propelled you forward, like there's no greater satisfaction or sense of fulfillment that I could possibly have today. So I just want to tell you, like, thank you, brother. I appreciate it. And my intention is to give generously to everybody who's made it here this morning. So let's talk about what Rick had alluded to was the dreams and goals call, which is our first call in a sequence of calls with a customer. And ultimately, the goal of that call is not to figure out if they qualify or what their FICO score is or what price range there is or any of that kind of stuff that would go in a 1003. The purpose of that call is to create trust, understanding, and influence. That's my current coach and mentor, Cosmo, by the way, who just ran out of the room. And before we get into that call, I think it's important that we go an inception point deeper. I can't teach you the words, scripts, or things to say that will perform if you're screwed up in here and if you're screwed up in here. So let's talk about how you have to show up before, and let's talk about the inner game before we talk about the outer game. You can have the best scripts in the world, but if in here you're empty and you don't trust yourself and you're letting yourself down and you're desperate, there's nothing you can say. Because we sense, the gut is the first thing that picks anything up. We sense energy from people before we digest words. It's like that quick. You can tell if somebody is real, authentic, settled, confident, is just here to help. And you can tell if somebody needs a freaking paycheck. You could just tell. So let's start on the inner game. Every $100 million producer that I know has a dialed morning routine. And they have a dialed evening routine. And it's not lost on me that that's challenging. Right before we went on Zoom, literally there's 60 seconds left and I'm like, Rick, Courtney, can I run downstairs and wake up my kid who I'm homeschooling? Like, it's not lost on me this shit is hard. But if you don't take control of the direction and the cadence of your day and your evening and your morning, I can't teach you anything that is going to get you from a $10 million producer to a $100 million producer. Jim Rohn said it best. Success isn't something that we pursue or chase. Success is like a butterfly. The faster we try to catch it, the more elusive it is. Success is something that we attract by the person that we become. Funny. You sit down, you clear your mind, you have a little gratitude for sunshine on your face. Butterfly lands right on your freaking nose. Right? You've attracted that butterfly by the energy that you're putting out. Try to chase it, it's out of here. Now, I learned that lesson 10 years into my mortgage career. And my tagline, actually maybe 5 years in, my tagline on my email at the time was the hardest working loan officer in the industry. So when I heard Jim Rohn say that, I was vehemently opposed. I was like, what does this old timer know about being successful now? And then I burned myself out as the hardest working loan officer in the industry. And then I had a kid. And then I had a wife who would actually rather have my time and my energy than my money. And then I started to realize, maybe getting to where I want to go isn't about running faster or harder or 24 hours a day or 7 days a week. Pre-approval, 9 p.m. on a Sunday? I'm in, baby. Put me in the game, coach. It's fun for a little while, but you're going to burn yourself out and you'll never become the person that attracts success. So there's a lot of things that we could talk about as it relates to becoming the person to attract success, but let's just stay focused on how do I show up so that when I get on a phone call with a client for the first time, that person's like, damn, that was different. There's separation between everybody else that I just spoke to. And I don't even know all the things that it was, but I know it was different. I know at a gut level, that's a different human and a different exchange and a different level of value that nobody else is talking about. Jonathan Roach coached me and many of the people inside of our mortgage company for a couple of years. And he said, look, make no mistake about it. When you show up, your energy is ranked by the person you're in dialogue with. You're either a 1, a 2, a 3, a 4, or a 5. That was his ranking. And if you don't show up as a 5 or a 4, you're going to get beat. Plain and simple. So your number one job is to show up every morning at a 4 and a 5. And that doesn't happen by accident because we all have kids. We all make mistakes. We all have partners. Like there's so much stress. It's not lost on me. So we have to have a routine, man. You have to have a ritual. You have to be intentional. No boat ever got to its destination without a freaking map and a plotted course. And it's the same thing for us. If I'm going to plot a course towards a 4 or a 5 energy, if I want to create separation from the next person that Rick's going to talk to when he's calling mortgage lenders, I got to be intentional about that, man. So for me, what does that look like? Last night, 7:30, my wife and daughter are on spring break. So me and my son are bachelors at the moment, and I'm homeschooling him. And I got Cosmo to take care of. So we wrap up dinner. He's working on school. 7:30, I'm in bed with tea and my reading material for the night. By 8 o'clock, I'm tired. I wake up early, man. Blinds down, I'm out. I sleep from 8 a.m. to 4 a.m. And some of you are going to be like, this dude's a freaking loon. Okay, you don't have to wake up at 4 a.m. like I wake up at 4 a.m. But it works. And perhaps you should, if you're waking up at 7 a.m., probably you guys aren't because you're all here at this, it's 8 a.m. Mountain Time. But if you want more success, consider going to bed a little earlier. Consider waking up a little earlier. Consider being more intentional about your energy. So I read something inspiring that I'm learning before I go to bed. I'm up at 4 a.m. First order of business, take care of this body. Vegetable juice, lemon juice. I love a good mushroom coffee from Laird Hamilton. I sit down, I spend 30 minutes with Dr. Joe Dispenza. Dr. Joe Dispenza helps me get into a place of gratitude. He teaches us that the precursor of all abundance is gratitude. If you're waking up in scarcity, thinking about problems, going on social media, you'll never show up as a 4 or a 5. Your actions are putting you in a situation where you are losing your ability to separate from other originators, because that's what most originators do. Wake up at 7:30. I got an 8:30 appointment. I'm going to have a cup of coffee, roll straight into social media. I don't have enough problems, so let's look at some other people's problems. That's really going to put me in an elevated space for this first call I got rolling here in an hour, right? From the meditation, I work on my business. Absolute do not disturb. If the freaking house was burning down, you could not get a message to me. Like that's how walled off I am for this time. I sit down, I worked on a presentation. I'm been asked to speak at Mastermind this year in Vegas, and I've finished my presentation today. And I spent an hour fine-tuning the slide deck and going through everything because it's due in a couple of weeks. That's working on your business before you work in your business. Then I go downstairs. I work out for an hour. I have a healthy breakfast. I wake my son up and start homeschooling. I jump on this webinar, but feel like I'm shot out of a cannon. And I've been doing this for 25 years. So if you haven't figured out how to write the manuscript for your evening routine and your morning routine, and if that routine doesn't change who you are to the person who is worthy to attracting success, if you can't figure that out, I got nothing that will help you. Like that is, you gotta fix the inner game before you fix the outer game. It doesn't have to happen overnight, but that's the first and most important path you need to be on. I'm gonna have a sip of coffee. Courtney and Rick jump in and What would you add?
Well, I think I found out some of the areas I'm missing. I need to improve my energy and and start off with more gratitude.
Well, I
Amen.
something you said that I think was great is, and I'm going to steal this actually, is work on your business before you can work in your business. I think that was a great statement you made because so many of us, no matter what your role is in this industry, again, we don't tend to do that first. To your point,
Totally.
folks wake up, they go right into their meeting. It's there's no planning, there's no strategic intention behind it. And, there's a saying, hope is not a strategy, right? You can't hope that you're going to be successful. You can't hope that you're going to close a deal. You can't hope you're going to do great at mastermind. You can't hope any of that, right?
Yeah.
You have to be intentional. You have to be disciplined. It goes back to, you're talking about fixing yourself. And it even goes back to, I say this all the time, with fitness, right? I'm a huge fitness guru. And when I hear people say to me, oh, I just, my goodness, I just can't do this. And, and it's this woe is me and, whatnot. And and sometimes it actually frustrates me when someone goes, oh, you're so lucky. And I'm like, there's no luck. Okay, in this is discipline. I did not want to be at the gym maybe at that time, but I was, right? Because I stayed the course and
Yeah.
I continued putting, that tunnel vision of this is who I want to be. So I'm going to continue down that road. And so anyway, so going back to, some of the things that you said, I mean, to me, it doesn't really matter if you're trying to be the best mortgage advisor or if you're trying to be the best parent or you're trying to be the best, whatever it is, you cannot do it by just hoping that you get up and miraculously it's going to happen today. Right.
100%. So I believe the only easy day in the mortgage industry was yesterday. From 1980 to 2020, maybe 21, we saw 40 years of declining interest rates. The yield on the 10-year treasury went from 18.5% to 0.57%. That's over, folks. Like that run is in the rear view mirror. Now we have $40 trillion worth of debt. Now we have a government that runs $2 trillion in deficits every year, adding to that debt. Now nobody wants to buy America's debt anymore because, yeah, it's going to get paid back, but it's going to get paid back with inflated dollars. Remember when you could buy a house for $180,000 and now they're $400,000? Well, all those people that are buying U.S. debt from the government, treasury bills, treasury bonds, they're getting their money back and it only buys half as much shit. That means it's going to be inflationary moving forward. And maybe we see some inflation and some deflation, but I am convinced the only easy day in mortgage was behind us. So, to your point, Courtney, what do we do?
Yeah.
We have to get better. It's incumbent upon us to take extreme ownership regardless of the external circumstances. And the only way I know how to do that consistently is through on time. So let's define that. There's two books that I read early that changed my life. The first one was called The E-Myth by Michael Gerber. And Michael Gerber said in that book, there's two types of self-employed people. There's people that are self-employed that are slaves to their business, meaning they are still trading time for money. If they don't show up in their business, no dollars go into the bank account. That's where most mortgage originators are stuck. And then the second type of entrepreneur is the person who builds system, they use leverage, they build teams and structure, and they can bone out to Thailand for 90 days, and the money that comes into the bank account probably goes up. True life story. That person is a true entrepreneur. And the only way you get from someone who is a solo originator to someone who owns a business with systems and leverage is through on time. There's no other way. So let's define on time. On time is working on something that is going to scale my business. I'm creating trainings, I'm creating marketing plans, I'm creating partnerships, strategic partnerships with referral partners. I'm learning. On time is spending an hour studying something that you're deficient at. It's the greatest use of on time. It creates the greatest amount of leverage. So anything that you need to accomplish that isn't going to pay you today, but is going to pay you big time dividends over the next 10 years, that's on time. Working in your business or in time is the stuff we got to do every day. I got to prospect for 2 hours in the morning. I got to call all my referral partners. I got to call my past clients and do annual loan reviews. I got to go to closings. I got to create an appraisal gap strategy when the appraisal comes in. That stuff is like price of admission. We all have to do that stuff. But if you just do that stuff for 10 years, your production will be the same. Maybe give yourself a 5% inflation kicker because prices go up. But you're not going to transform from solo originator to someone who's leading a team and doing hundreds of millions of dollars of production. You have to have that on time. The second book that really gave me clarity and changed my life was a book by Cal Newport. Now the name just escaped me. But I'll just describe the book because the name doesn't matter. He talked about the scarcity of focus. And he said the vast majority of people get inundated with ideas. They get inundated. Deep work. Thank you very much. He described the inability to do D work as a plague for intellectual workers. And that as technology and communication and all these types of things were getting more abundant, you had to work harder to do deep work. So when I was creating my perfect week, my perfect day, I knew I need to figure out a routine that puts me in this chair at 5:30 a.m., because nobody's reaching out to Josh at 5:30 a.m., and gives me 90 minutes of deep work on time before anybody can get to me, and I need to show up butt in chair in a peak state. Now, I've been doing that for 16 years. That's 6,240 hours of deep work working on my business. So if you're like, man, Josh kind of knows a lot of shit, that's cool. You know, he's going to have a $26 million month in his production team. Like, I wonder how he got here. 6,240 hours of working on my business before I work in my business, man. Like that's the jam we all need to be headed down.
Yeah, and that's a great segue. The reason we were doing this call and the reason I connected is I was doing my deep work of learning my scripts and came across the dreams and goals. So share with us more about that call because I'm like 90% of the people on here have no idea what your dreams and goals call looks like.
Sure. So let's move from thanks, Kim Creighton. I appreciate the fire. So let's move from the inner game, which we just spent the last 24 minutes talking about. And now let's move to the outer game, right? Now, this is the tactical stuff of what do we do when we get on the call. First of all, let's step back and just assess, like, what does the average first call look like? The average first call looks something like this. Oh, great, Rick. You're looking to buy a house. And Courtney referred you to me. She's the best. So is this your first home?
Yes.
Great. And what purchase price are you thinking you're going to buy at?
250,000.
Okay, great. And how much down payment are you going to put down, Rick?
As little as possible.
Okay. Well, we're going to have to source and season that money. So could you tell me where that money is today?
It's in the bank. I'm probably going to put 3.5%.
Okay, great. And that's your own name on the bank, or is it somebody else's name on the bank account?
It's my name.
And Rick, do you know what your credit score is?
In the sixes, mid to high sixes, I believe.
Okay, great. Well, Rick, based on what I know so far, I think we're going to be able to get you a great rate and we're going to be able to close really fast. Could I send you a link for you to, oh, I'm sorry. Go ahead.
No, so that's great.
Could I send you a link to do the application?
Sure.
Great. I'll send that right away. And I'll let Courtney know we connected. Thanks, Rick.
Thank you.
I bet you 80% of all first calls are something close to that. Maybe they're a little longer. I was trying to keep it tight, but thank you. That is so on point. Okay. You want to be so basically what was I doing? I'm basically filling out a 1003, right? Okay. Spoiler alert. AI can do that. So we better get as far away from that as humanly possible. What can AI not do, at least effectively at this point?
Connect.
Connect. It cannot create relationships. Go ahead, Courtney.
Yeah, I was going to say my tagline is relationships matter. So AI can do what they want, but relationships matter when it comes to business.
100%.
Anything, but we're talking business right now. So relationships matter, and people just tend to forget that. They just want to live in an AI world now.
Totally. So here's an easy catch. If you find yourself, and a lot of you on this call are very successful, right? So I don't mean to, tell you to change everything tomorrow, but if you're not reaching the level of success in this market that you want to reach, perhaps consider trying something new. And one of the great catches is when you start asking questions, and we've been doing, many of us have been doing this for a long time, so it's kind of like repetitive, like we have muscle memory, like we'll just fall back on these questions. But a good catch is if you start sounding like you're asking the questions on a 1003, you've got to pivot. You've got to move away from any of that kind of stuff. And you have to move over towards creating relationships and connection. Let me share something that I learned from Alex Hormozi, and we can get kind of deeper into this scripting. Alex Hormozi talks about a value equation. He's written a couple of books, $100 million leads, $100 million sales, $100 million marketing. There's a series. I can't remember which of those this came from. And he describes this value equation. Rick, just out of curiosity, have you ever heard of the value equation by Hormozi?
Yeah. I'm a huge Hormozi fan. You can actually get all his books for free on his website, and he has videos breaking down the chapters. So he's on a board. Yeah.
He's such a baller. His business model is insane too. If you figure out what he's actually doing for the drive revenue, since he's giving all these books away for free, it's next level. Anyways, I digress. In the value equation, he says, and his background is gyms. And he says, look, why is it that Planet Fitness will give you a gym membership for $19 a month and they can't get enough people to sign up? And at the same time, Trainer Joe over here charges $5,000 a year for physical transformation. What's the difference between those two things? And he says it's all about the value equation. And he says, if you want to crush it in terms of creating value and being able to charge a premium price, you need to do three things. The first thing is you need to increase the perception of success. When someone walks into Planet Fitness and they see a bunch of unfit people on the machines, they are not doing anything to increase the perception of success. You walk into Trainer Joe's, the dude looks amazing. He's training a bunch of women that look like Courtney. And all of a sudden you're like, I got a feeling this might work for me. So we need to increase our perception of success. The second thing he says is that you need to increase the perception of the dream outcome happening faster. In other words, if my dream outcome is to lose 25 pounds, it might be worth $1,000 for me if you can get me that result by the end of 2026. But how much would it be worth it if you could get me that result on May 1st? Because I happen to have a pool party that I want to show up to on May 15th. So if I can get to my dream outcome faster, is it more valuable? For sure. For sure it is. And then the third one is increase the perception that you can get the dream result with less friction. So when I go into that dreams and goals call, I don't care anything about the 1003, right? I might ask, is this your first home? What have been your experiences before? But all I want to do is collect information about Rick. Why are you buying a home now, Rick? Oh, because it seemed to be, let's just role play for a minute, Rick. I don't know that we'll have like a normal dreams and goals call team could be anywhere between 30 and 45 minutes. So we're going to have to do like an abridged version, but let me just give you like some flavor of it, some ideas. So Rick, out of curiosity, how did you meet Courtney? Why did you decide to buy a house now?
A friend from church recommended Courtney, said she's a great realtor, and my wife and I were having a baby, so it's about time we have our own place.
Courtney is hands down one of my favorite to work with. In fact, the last clients that Courtney and I worked with, which were first time home buyers, very similar to yours, we were able to get them into a home in less than 3 weeks.
Really?
And it was really a lot of fun working with her and just watching how she navigates constructing offers and creating relationships. Out of curiosity, has anybody, by the way, am I the first lender that you're talking to?
You are. I've never
Okay.
done this before.
Okay. And why now? Like I know you said you're having a baby, but there's always a reason to buy a home or a reason to rent. Like what's the real impetus behind making the decision now? What's the most important thing to you?
Well, we're tired of renting, we just want our own place so my our daughter can play in the yard and grow up and not grow up in an apartment complex. Both of us grew up in homes and we want to do the same for her.
Well, I grew up in an apartment complex and I would have much rather have grown up in a home, if I'm being honest. So I applaud you, brother. Congratulations on your first and congratulations on being a great dad. Now, I wanted to ask the question, has anybody else talked to you about how you can structure your offer so that the seller can actually pay a portion of your mortgage payment for the first couple of years? I assume you haven't had that conversation because you haven't talked to any other lenders, but has anybody else talked about that strategy?
No, I don't know if they could pay my mortgage payment.
Yeah, so it's one of the things that Courtney's really mastered in this market, and the great thing about the market right now is there's a little bit of slack. Have you noticed that? Like, are you been online house hunting and are you noticing some price reductions or maybe
Oh
some
yeah.
homes? Yeah, what are you seeing? Just out of curiosity, and and
Well,
and how do you feel about what you're seeing?
yeah, I'm going on Zillow. Some of the houses we're looking at $10,000 markdown, $30,000 markdown, like all these markdowns, which makes us think that that now's a good time to buy.
Yeah, yeah. So there's two schools of thought to that, right? Some people are fearful of markets like that. And ironically, those same people, when there was 25 offers on a home a couple of years ago, and they were bidding up the properties by 40 or 50,000, they were very comfortable in that market. But now that they're starting to see price reductions, they starting to get nervous. And I disagree with that philosophy. I think the way you're looking at it opportunistically is the right way to do it. See, what happens is when there's more sellers than buyers, because obviously interest rates are periodically elevated at the moment. I happen to think they're going to come down in the near future. But when that happens, the buyers take control because there's more sellers than there is buyers. It's simple supply and demand. So one of the things that Courtney has mastered, and I've really enjoyed working with her on, is what's called the seller payment subsidy program. If you want to write that down, seller payment subsidy program. And I know that sounds a little bit confusing, but all it is just a more intelligent way to structure your offer so that we can take some money from the seller and we can bank that money in an account that can help offset your mortgage payment for up to 3 years. Now, I just out of curiosity, over the last 3 years, what's happened to your income? And does your wife work, by the way, Rick?
Yeah, she works. She's works at the CDC, and our income, the last 3 years hasn't been great. Prior to the last 3 years, it was going steadily, but the last 3 years has been a little bit rocky with what's going on with the government.
Yeah. Okay. Well, that makes sense. Oh boy. we could spend an hour talking about that. So in most 10-year periods, you'll notice that, your income goes up 3, 4, 5% a year, right? Depending if you're self-employed or a government worker or whatever. But you can guess over a 10-year span that income's going to increase. So the nice thing about this seller payment subsidy strategy is it gets you into a home with a deeply discounted payment. And then as your income steps up, the mortgage payment steps up over 3 years. So it's a strategy that honestly Courtney's mastered, and I think we should go deeper on in our next call, which is we're gonna go over numbers. We're gonna get into your pre-approval. We're gonna go over all those types of things. This call is just for me to understand how I can best serve you, how I can help you, what you need to learn. Before we talk about that next call, what other questions do you have, concerns, or anything that's like really important that we should just talk about?
Well, I mean, obviously the rates right now are really high, and I'm really concerned about getting a great rate because, I saw that my friend told me they got a 3%. I know 3% aren't around anymore, but I really want to get the best rate possible.
Totally. So I'm buying a new home right now as well, Rick. And I'm going through that same struggle that you are. My current house is at 3%, and I'm looking at a mid 6% interest rate, and it's a little daunting, to be honest, bro. But here's what I know about mortgage rates. Mortgage rates aren't forever. Because you and I are likely going to take out a 30-year loan, that doesn't preclude you from restructuring that indebtedness the minute that interest rates go down. Are you familiar with what a refinance is? Like, I didn't know when I first bought a home that you could refinance. Are you familiar with what that is?
I've heard of that.
Yeah,
It's you just do the home again and get a lower rate, something like
totally.
that.
So one of the great things about working with us is that none of the loan programs we're going to talk about are ever going to have any type of prepayment penalty. So literally, if rates go down in December, I'll be watching your mortgage rate and reaching out to you proactively to restructure that. In fact, within 2 weeks of us moving you into your home, we're going to get on a call and we're going to set what's called a strike rate. And that's the rate that would reduce your monthly payment to a point it would make irrefutable sense that we should restructure that indebtedness and we should set out on a new loan because I'm going to be able to find you cheaper money. So we're going to set that within 2 weeks of you closing. And then I have a system that tracks your interest rate relative to the interest rates of the market. And as soon as the system, which is using artificial intelligence to monitor my entire client database, triggers, we're going to refinance that loan for you. But here's the cool thing. I don't know if that refinance opportunity is in 6 months, 12 months, or 2 years, Rick. But I do know the cyclical nature of mortgage interest rates. They're always doing this. You mentioned your friend had a 3% rate. I have a 3% mortgage. But if you look back over the last 40 years, the average 30-year fixed mortgage rate was about 7%. So we're kind of like in the average right now. And I think we'll catch the next wave down and be able to restructure that indebtedness for you. But in the meantime, if we play our cards right, and if we work really closely with Courtney, we should be able to structure a situation where the seller can get you into that home at a reduced rate for the first 3 years. Meanwhile, you're paying a lower payment. I'm watching and monitoring your mortgage, and we'll pick an opportune time to restructure. Does that ease your apprehension around the interest rate market at all?
Okay, that's very helpful.
Great. Any other questions you have, Rick? I know this is a big mountain to tackle, right? How do you eat an elephant one bite at a time? Is there anything else that we need to bite off in this conversation before we move on to the next step?
Well, I hear sometimes, there's when I'm looking to buy a home, there's multiple offers. That
Yeah.
concerns me because I don't want to, don't want to spend a lot of money. Want to get the home.
So glad you asked that question. There's 3 things that we focus on that you're going to experience throughout this process that I should bring up now that addresses that exact question. When we start down this path after our next step in our process, we're going to go through a pre-underwriting process. That pre-underwriting process is going to look at income, it's going to look at assets, it's going to look at credit, it's going to look at all the things that can be a landmine that many borrowers step on the weekend before they're trying to move into their home, or the Friday before they're trying to move in their home. We're going to uncover all of that before we ever send you out to look at homes. So that enables us to do two things. Number one, it's going to reduce a lot of friction, because I'm never going to surprise you and your family the week you're trying to move into your home. And number two, it's going to shorten the duration of time that it takes to get from writing an offer to closing. Now, that is valuable not only to you, but it's valuable to the seller. So in the instance that we have a multiple offer situation, I would be jumping on a phone call with the seller, and I would be introducing myself. Hey, I'm providing the financing for Rick Guerrero. Let me just give you an update on the financing standing. We've gone all the way through the underwriting process, income, credit, assets, all signed off. We need an appraisal, title report, disclosures signed, evidence of insurance. We can close. You notice the offer that Courtney wrote was very short timelines in terms of your inspection period and due diligence, and very short closing. That's because we've already done all the heavy lifting. So I'm going to help you present your offer almost like a cash offer, because we're not going to have to worry about going through underwriting, which 90% of other offers are going to have that. So you can anticipate with me three things. Number one, I'm going to get you to the closing table faster. Number two, I'm going to remove the friction, because we're going to do all the heavy lifting early. And number three, once I tell you that your loan is approved, I will not fail you and your family. 100% certainty you're going to move into that home and deliver that bedroom to your daughter as you promised.
Love that.
I just went back to the Hormozi thing, right? My whole value proposition. I'm talking mortgage, but then I just go back. So if you believe rate is the most important thing, it's the most important thing. If you don't believe rate is important at all, like, I don't know, like, maybe at all is too strong, but guys, look, I'm going through the mortgage process right now, right? 25-year veteran in the mortgage industry. I'm going to a wholesale lender that I know the person who runs the division for the wholesale lender. I'm doing a bank statement loan. I'm taking a rate at least 3/8 higher than I could get somewhere else. I don't want the financialoscopy. I file 23 tax returns for my various businesses and real estate investments. I don't want to source large deposits. I don't want any of that crap that comes with a conventional Chase or what have you jumbo mortgage. Like, I am not having it. I want ease. I want certainty. And I damn sure am not going to tell my wife that we're moving in on June 1st and blowing that closing date. Like, I can't deal with those three things. So I'll knowingly pay 3/8 higher of a rate on a very big loan. Like, this is not an inconsequential number of dollars, but I want certainty, man. And our jobs as originators is to connect, to care. Who cares if you get the deal? Just care for that person. Care about Rick's daughter. You make sure his commitment to his daughter is going to happen. That's all you care about. And then you tie back to those three things. You work with me, we will get you in that home. It'll be faster. It'll be less friction. That's my guarantee. And they'll be like, I just want that. That rate thing that I was thinking about before actually doesn't resonate. I want that.
I love it. Super helpful. I know we were over time. A lot of people stayed on to watch. Thank you so much. If you have any questions, put in the chat box so we can ask Josh while we have him here. But I love how you discuss the rates. I love, and obviously I've seen more of your stuff. So I love how you talk about you're going to put them in your strike rate and follow up with them when rates drop and save them money. How valuable would it be to have a loan officer that's always watching your back after closing? I love how you talked about calling the listing agent to help win the deal and make the deal look stronger. I think those are all components that align with the Hormozi philosophy of bringing massive value. So that way, when they talk to that next person, they something I learned from Ryan. Ryan says, "Well, of course they offer a lower rate. They don't offer you anything else. They're a 9 to 5
Right.
banker, right?" He's like, "Of course they have to offer you a lower rate over at um Navy Federal. They don't have. You're gonna call in, talk to a different person every time. If you have a question about something, you got to call a 1-800 number. They have to be the lowest rate."
100%. Hey, and team, I know we went
Oh,
deep on the inner game, so I just want to give you a free gift here. I dropped into the chat a link that I think will be very valuable to everybody. I'll pull up a QR code here, and I just yesterday was thinking like, what are the top 5 objections that we get from customers on a regular basis? And I came up with, what rate can you offer? Can you beat my credit union? What if rates go down right after we lock? I don't know if this is the right time with the market. Can I think about it and get back to you? How are you different from Rocket or Zillow? Insert credit union, whatever, right? And we created this custom GPT inside of the Loan Atlas called the Sales and Scripting Coach. And so I took those 5 questions, I threw them into the GPT, and I created not only scripts for you, and here's the page. If you go to this website, you'll land on here. Not only scripts for you, but I created a coaching framework. Like, how do you think about that question before you answer it? And then here's a short version and a long version of the script. So I hope that's valuable for everybody. That's my free gift to everybody. And thanks for being here today. It was a lot of fun.
absolutely. And I encourage everyone to download those scripts because I pay to be in the program and it's worth every single penny because everything I've gotten, every script, every word has helped me become better. So download that. We'll have a link out sent to everybody. We'll have it attached to the YouTube replay. Josh, thank you so much for taking the time to be here today and share with us.
My pleasure.
Yeah, gosh, what a fun call. Thanks, guys, for sticking around with us.
Yeah.
Thanks, Courtney. Thanks,
All right.
Caleb. Thanks, everybody. Have a great day. Go crush.